ESS Securities, an education and information firm on the Gold Coast in Queensland, Australia. And every day I actually go through what happened overnight and probably past week and so on, and try to forecast what we are likely to see on our market and the global market today and the next few days. I will try to tell you what is hot and what is not, what you should hold and what you should fold. And by the way, we would really appreciate any feedback if you have any. Well, overnight and from around the globe, we start with the Dow. You can see here after 2 beautiful days, nearly 1,000 points up, more than 1,000 points, nearly 4.5% or thereabout. The market decided to give some money away, obviously on the back of a lot of spat between China and the US. Well, okay, the S&P 500 was also slightly down, and the Nasdaq also was slightly down as well. In Europe, the Stoxx 50 index, which comprises most major European markets, was up 1.4%, continues with 2 beautiful days previously. The FTSE 100 index also, same as the overall market, 1.2% up overnight. The DAX in Germany, 1% up. In Japan, the Nikkei was up 2.3%. And in China, the Shanghai index was up 0.3%. On our market yesterday, we've had 76 points rise. The banks continue to do very good performance after a big silence for many weeks. Another 1.3% on the gauge, our market gauge, which is the ASX 200. However, the futures this morning are indicating that the market is most likely will drop by 20 points at the start of trading. Gold was steady, 1,728. Silver, 1% higher. And copper, 1.3% higher. Brent oil, nearly 2% up. That's per barrel, $35.40. West Texas crude oil, $33.70 US per barrel, up nearly 3%. Soybeans continues to go down, 847 US per bushel, down 1.2%. Let's call that almost steady. The Australian dollar versus the US, 66.2, steady from yesterday. And against the euro, 59.75 euro cents, slightly down from yesterday. And will give you 53.7 British pence. And that is a bit less than yesterday. Okay, looking at the charts, this is the Dow, the weekly and the daily. You can see that the Dow, having retraced all but 50% of the losses from the peak to the bottom that we've seen in March, managed to recover 50% and headed towards the 61.8 Fibonacci retracement, and that's where it's sitting. Now the question is, I believe that it will hover around the 61.8% for quite a while, maybe I say a week or two. Looking at the daily, the parabolic stop and reverse shown by the red dots here, bullish. The stochastic here is bullish. The orange dotted line, that's the 9-day moving average above the black dotted 21, that's bullish. The only thing is that particular candle is actually outside the Bollinger Band, and that looks like it might be retracing back. On our market here, we can see that we retrace 50% as well. Are we going to go up to 61.8? Not today for sure. At least the market is likely to go down today. And look, all the indicators similar to the US. The parabolic stop and reverse bullish, and the gap is expanding between the bottom of the candle and the dot. So that's bullish, very strongly bullish. The stochastic above the 80% line, again bullish. The 9-day shown by the orange dotted line, that is actually above the 21. Again, the crossover, that's bullish, and the candle, of course, very bullish. And you can see here the 50-day moving average still below the 100, the 100 still below the 200. That is the long term, but you can see here the bend, the U-shaped retracement. I think that is very positive as well. In terms of volume, we're starting to see huge volume in the market, nearly 4 billion after 4.1 billion the day before. And look, of all these days, only one day we've had the declines above the advances. All the other days, you can see here, the advances happen to be above. Today may be a little different. And the last 2 weeks, you can see here, the advances on a week by week, much higher than the declines. Now, our mechanical system, the one that we have designed based on different time frames for different investors and traders. For the investor, we look at the monthly and the weekly. For the traders, we look for the weekly and the daily. And for the very aggressive, we look for the daily and hourly. And we have different forecasts based on these indicators. When we look at 2 time frames, we look at 5 out of 8 indicators, and that actually sends a message to the slower chart, and provided 5 out of 8 on the slower chart confirm with the signal from the higher, then obviously we go either bullish, neutral, or bearish. We run courses here at our school, and we teach people how to trade, how to look at the market, how to look at technical and fundamental technical analysis, and obviously we help you to understand how the market gyrates. Well, here you've got the American market really continues to be bullish, with the exception of the Dow has retraced a little bit of the conservative trader, gone from bullish to neutral. Again, some new indicators moving away from the bullish side. Remember, some of the indicators are lagging and some of the indicators are leading. Gold, we've lost that bullish for the long term, so now we are bearish for the very aggressive trader and neutral for the rest. Silver, on the other hand, we're still very bullish. Coffee, if you're trading other commodities, and orange juice, very bullish and bearish respectively. The Australian dollar, strong. The American index, which is actually the basket of currencies, against the euro, the British pound, the yen, the Swedish krona, the British pound, obviously is now turning bearish. Okay, the British pound also, we had bearish, bearish, bearish. We lost that bearish for the conservative trader into neutral. Finally, for our market, we can see that our market is very strong at the moment, with the exception of Woolworths, going bearish for the aggressive and the very aggressive trader. And by the way, this presentation will be placed on our website in a very short time this morning. Okay, finally, we want to let you know that we always look at the market and we see which stock or stocks have actually exceeded their average volume. So for instance, Westpac, here you can see the price was actually up 4%, and the volume, the daily average over 50 days is 15 million transactions per day. That's the moving average. Well, yesterday we've seen nearly 26 million, and the price was up. Same with ANZ Bank. The price is nearly up 5%, and again the volume was higher. QBE, another company, another stock, had 4% rise in the price and reasonable volume as well. And you go down, National, Telstra, Stockland, Origin, Cochlear, and all these companies had increase in volume, and again slight increase in the volume or higher increase in the volume. On the downside, CSL had a drop of 0.2%, not a great deal, but the volume was greater. And again, for the various mid-cap, Bellevue Gold, day after day, continues to go higher and higher and higher. 11.1%. It's really been going crazy, from 17 cents to nearly 80 cents in only a few days. Flexi Group also appears day after day, and you've got various companies here. On the downside, we've got Select Harvest. Maybe that's actually the one that sells Bailey to China. I'm not really sure. But anyway, if you look at those companies, and again, we also show you on the slide what happened the day before. You can see what happened the day before. I mean, I'm talking about yesterday morning versus this morning, what we see to the previous 2 trading days. Okay, well, in terms of announcement today, looking down here, we got the private sector credit month on month at 11:30, and tonight, going down here, the US, we've got some data coming from the US and Chicago PMI. All these announcements can affect our market. Again, results. Yesterday, we've seen that GDP price index, the US, we're expecting 1.3% GDP. Well, of course, that's much lower than 2.5% they expected. Well, actually, it was better than forecast. Unemployment claims, they expected 2.1 million, while we had 2.12 million adding onto the unemployed. America now has got 40 million unemployed people. 1 in every 4 employed or supposedly available for employment out of work. Okay, our disclaimer: before you take any action, please remember that everything we said here is for general advice only. And before you take any action, please consult with us or with your professional advisor. We don't know your financial circumstances, and therefore that's the reason. And by the way, there is no guarantee that the market will go in a particular direction as forecast. There are too many variables, and we cannot really determine all these variables. So be cautious, and remember, the market has got risk and reward, and you need to understand your risk appetite. If you have any questions, well, of course, you have to ask. And if you want to ask me, you write to me at George@FS Securities. FS stands for full service. FS Securities, plural.com.au. And if you ring me from overseas, my mobile number, and by the way, I'm available 7 days a week, almost 12 hours a day. Except when I'm playing tennis and I'm playing bridge and I'm playing backgammon, when I'm in the movies or whatever. Anyway, if you ring from overseas, it's 61, you don't need the 0, 61-411-259526. Ringing from Australia, you don't need the country code. You ring 0411-259526. Happy trading, and hopefully you make some money today.